As we look at the Nasdaq 100 and the SP 500, we need to talk about exactly what happened on the day. Yesterday, I was talking about having SPY puts, and I had Exxon calls. I mentioned that in the video from yesterday. I'm going to talk about exactly how those performed and where I see us going over the rest of the week. And specifically, are we going to drop, or is this pump really real right here? Now, before we get into that, to ask you to consider doing two things: liking and subscribing. Every single day, I'm going over exactly what I'm trading, why I'm trading it, and how I view the market specifically based on news. Also, the Discord link is down below if you are interested. I'm going over everything I'm trading as well as I'm doing it. I try to break it down very simply for you. For instance, those trades yesterday, Exxon, that was the win. I talked about the loss that we had with Amazon as well. But looking at those SPY positions, everything really transparent for you, the people as well. But let's get into the video. So first thing we're talking about is going to be NQ, obviously. And as we look at NQ, what I want to do is go to the 4-hour chart and just show you what's happening here. In my opinion, you are operating in basically this level of supply, right? You continue to come to this area and get rejected on a repeat, right? So we go over the past basically week and a half, 2 weeks. What's happened? You come down, you make new lows, you come back up, you retest this area over and over again, right? Just on repeat, just consistent, right? But you have more of an answer here on ES, and ES is S&P futures. If you don't know, I'd just like to break that down for you. And where are you testing, right? I want to mark this key level right here, going back to May. These are your May lows from this year. As we zoom in, what's happening? What did I tell you guys as well? I told you that, one, the ES is leading indexes right now. ES is leading the market in comparison to Nasdaq. That's my personal opinion. Now, as you look here, you can see you rejected yesterday at close at this level, and then today you tried to break above and got rejected once again, holding below the daily open as well. Now, does this mean that tomorrow you're going to dump again? No. So what did I do? I ended up selling half of my SPY position at these key levels down here. And what was this level that we were looking at? As you go back to the Nasdaq, and again, you're going to notice a key trend in everything that I do here. It's a lot, and it's mostly all based on indexes, how I trade. So when you come in, where did you end up coming down to? You came right back down to that key level that we had mentioned right there at 11.35, 11.37, right? We can see how you rejected there from the week before, how you rejected there on Monday afternoon at the end of closing, you ended up breaking through that. And then you can see today, you ended up coming right down there and bouncing. So what did that mean? It means you were probably going to get a bounce. That's what ended up closing over half my position there. And then you started rocketing back up. But it's important to realize that you're rejecting once again from this level as well. So am I saying you're going to come back down to those levels? It's likely. But what I want to mention here, what I'm looking for is a break back up and maybe getting a test of 11.8. Now, I'm not trading the upside here personally. And I know you're going to say, Tyler, why do you not want to trade the upside? For me, I've made all of my money trading this towards the downside and playing the overall trend. What does that mean? A lot of the volatility that we're getting, a lot of the, specifically with SPY and these other stocks that I'm trading, is you're getting a lot of downside pressure out of the gate. So you're getting a lot of Vega increase on those options as well. So you're seeing that perform best. And so I like to be on the side of volatility, be on the side of momentum. So that's what I've been doing right now. And this low chop to the upside, I've been focusing on oil trading. So that's also what I'm doing there. So overall, that's what I'm looking at. And I still see the potential for downside. Why? Based on where you're rejecting and how you continue to reject, as well as looking at VIX. When you look at VIX, what's happening here? Now, end of the day, you had a little bit of downside coming in here, but just look at how you're overall responding here. You had a bounce on the day back to 30. You're kind of just trending here. And this is really interesting from my perspective to see VIX kind of just trend above $25. Very, very random, very, very weird. And it's, to me, indicative of more downside as well. These are just things that I'm looking at and how I'm overall playing this market. There's no real secret sauce to this, as I always like to say here, right? Now, I also want to mention DXY, and DXY has been one of the best indicators as well. DXY, what happened? So yesterday I mentioned that the possibility coming down to our level down here at 109. Now, again, what I mentioned and why I went long on oil was the OPEC Plus meeting. What happened there? You had OPEC overall cut the amount of barrels that they are producing down 2 million a day, which is very bullish for oil, and is why oil went crazy today. So you started bouncing, and the dollars responded well from this. This is just what I'm looking at, right? So you break up, you kind of get a push back down. In my opinion, this is not really bearish. It also looks like you're flagging here on oil once again and getting ready for upside pressure. Now, again, I think you need to break back above this 11.8, but ultimately you're looking to get back above the key range of 12.5, 12.6. You get above that, I think you're looking very bearish on the economy as well. Why? Because the dollar is one of the best charts to give you a structure of what's really happening with indexes as well. Junk bonds, what happened today? Even with the balance you had today, guess what happened? You moved up on junk bonds, you came back down today, and then guess what happened? Boom, you got rejected at the same level. Junk bonds still show a risk-off sentiment on the market. So they do not want to have heavy risk into these junk bonds, into riskier assets such as tech and other assets across the market, right? They're looking at a risk-off perspective, which is heavy into the dollar, heavy into commodities, right? That's why you're seeing gold do well. That's why you're seeing oil do well right now, okay? I want to make sure that's highlighted and focused on right now. So I'm still looking at this. If it gets above this area, then we can talk. That's what I'll be looking at right there. So going into SPY as well. Looking at SPY, where is it operating? Now I want to highlight where you're at. You're not at May. I think the May lows are way up here around 380. But locally right now, you're still getting rejected and you're holding below the previous highs you had made on September 21st. Okay, and you haven't even got a retest of previous lows here. You did also end up filling the rest of those gaps as well on SPY and QQQ. So you're still rejecting there and you're holding out these levels. It's important to realize where you're at. Now, coming back in here, you have a clear demand down here coming at 370, 371. These are just areas I'm looking at, what I'm focusing on, and what I'll be watching going forward. Again, so as long as you're below this range, I have to anticipate a retest of around 373.5 and a retest of 370.8, which is that demand zone down here. So these are the areas I'm focusing on. These are the areas that I'm watching. Now, again, what am I looking at? I personally still have a few SPY puts, and I bought a little bit more at the end of the day when you get that nasty little pump. And I have them for November 18th. So I have a lot of time on these. And ultimately, these are just going to be kind of how I situate myself with the market. Because again, I'm watching how big money's moving here. If you come into Cheddar Flow, you come in and really look what's happening here. Look, we're going to Qs. We're seeing a lot of puts being bought. More than possibly we've seen in the past few weeks. They're coming back in heavy near the end of the day, specifically on that pump. We're going into SPY. What's happening here? Boom. A lot of them flowing in. And again, I was so heavily talking about October, but now you're seeing these start to get established into December, January, November. You're seeing a lot of these positions being bought. But I want to highlight as well, a lot of these are in the money as well. So you need to focus on that as well. They're not as aggressive as they were before, but they're still situating themselves and expecting some downside here. So I want to keep that on the highlight. Looking at VIX, still people are very, very bullish on VIX as a whole. So these are all things I'm looking at, how I'm viewing the market, how I'm kind of preparing myself and kind of trying to protect myself in the market as well. So right now, what do I have at positions? I have SPY puts 360 for November. Also, what do I have? I have Oxy Petroleum, one of the best overall oil companies there is. And this is the one that Buffett has been buying. And I'm not going to lie to you right now. I anticipate they're going to release another statement about Buffett buying more oil. I think it's going to happen. You're going to get a little pump here as well. But what I want to highlight here is yesterday I traded ZOM, and let's just look at where some of these oil companies are. I'm just going to clean everything off and just get rid of everything so it's just very clean for you. As you can see, Oxy still has almost $10 to go to its all-time highs here, right? Or its local highs, right? Exxon, we traded this one last night. You're already at $100 basically. You only have about $4 more to go. You're almost there, right? You've moved up great. This was the great trade for last night. Devon, some of these other energy companies, still getting really close, about $8. Very close there. Fang, Diamondback Energy, you get above this for 140 level, you are going to be trucking up to 148, possibly those highs around 160. So there's other plays in this oil field that are going to do very well. And I'm just betting on something like Oxy because I like how they overall are moving. And I also really like that Buffett's the one buying them as well. I think this can create FOMO from other investors as we come in here. It's worth mentioning Oxy has had a really good run. Okay, it has. But I'm using this almost as a hedge on my SPY position as well because I see oil going up over the next few weeks as well. And I've already made money on oil as of yesterday. That play went up over 120%. It literally went from $1.09 a contract yesterday at close to over $3 today. That's just on one trade with a lot of time on that position as well. So that's how I'm playing the market, how I'm looking at the market right now. Now, there's a lot of plays out here that, in my opinion, look good. There's a lot of downside positions that I'm loving. Okay, so I'm just going to go over a few of them here. Number one, we're going to talk about Amazon. If I look at Amazon, basically here on a 5-minute chart, I just wanted to show you the overall structure going on. You're coming back up to this level and getting rejected at 121.5. It's important to mention as well that you operated at a higher level yesterday and you made a higher level yesterday and you're making a higher low today. Why? You're making, a lower high today, even with the Nasdaq and S&P pushing higher today than they were yesterday, which shows weakness here in my opinion. Going into Microsoft, you're kind of getting somewhat of a double top here as well. And I want to highlight that very clearly for you so you can actually see that rejecting here. So if you start coming into tomorrow with weakness, I'd be targeting really quickly back down to previous lows and filling this gap back down to 242.5. I think you have a lot of room down here. It's worth mentioning and worth following up and watching for. Going into Meta, you're going to see a lot of these big names. You started filling that gap today. You couldn't get quite back into this range, and so until you get back to 242, that's the short zone for me. I wouldn't be getting too aggressive here. So I want to make that really clear. Tesla, I saw someone, and y'all might know who he is. He was saying to go long on Tesla. Now, this is the important thing of where I think that you can kind of get really caught up in the market. I like to break things down into time frames and also give you an overall viewpoint of how long I'm really looking here. Tesla, I don't really think there's a reason to be bullish here. Why? Because you're coming right back down to previous lows. Until you get back above these previous lows, if you can start to mount this level, you're already getting somewhat of a flag here that is worth mentioning that you're trying to flag here and to get above. But unless you mount this level, that's where I'd be looking to long. I would not be looking to long underneath it. I think longing underneath this is sheer stupidity, and I'd be very careful. But yeah, you had a decent level. You had a bull flag. Some people in Discord were trading this as well. But be very careful, right? I think right now looking at scalps is extremely dangerous because you're not getting follow through on the market in specific directions with that volume. I think volume is the clear-cut answer that's going to make you money in the stock market. And right now, volume gives you up and it pushes you back down. It's also worth mentioning, looking at the volume today, you did operate under your 30-day average once again. It's important to view that as well. The last thing I'm going to look at is going to be Bookmap. As we look at Bookmap, the past few days, I've been talking heavily about what's happening here. We've seen tons and tons and tons and tons and tons of short positions being established. Today was a little bit different. It was both ways back and forth all day long. You actually had your biggest orders towards the upside here, right? Your biggest orders, 836. And then again, you had your another big position right here, about 1,300 lots as well. So you did have a lot of upside here today and a lot of buying happening here as well. So I'm a little bit careful here. But it's worth mentioning the past few days have been tremendous for these short sellers. They have been going heavy into those positions and setting themselves up for those data positions as well. I recommend going and looking at the overall options open interest and looking at what's happening with that premium, because there's tons of in the money contracts on puts and out of the money. And it's very dominant towards the put side, which represents the sell side, and the downside basically establishing lower on the overall market, right? So I want to make that really clear. News overall calendar, I'm not really watching too much. Friday, you do have job numbers being released. That will be important to know. So if you can come down here, this is investing.com. It's all free. It's pretty solid. Some of these stuff you need to watch out for, but overall, Friday's going to be probably the most important with jobs data. I see that being one of the biggest factors on the market overall. But besides that, I'm not too worried about any names or any meetings or anything like that. You do have Fed members speaking all week, but it's worth mentioning those Fed members are all saying the same thing, right? They're still sticking to policy. They still want to push rates back up. They still want to keep hiking rates. They don't want to cut rates in 2023. Nothing shifted there. So it still has me on the basis of the market still aiming for that downside personally for myself, okay? But again, I'm not taking quick trades for the downside. I'm establishing positions and letting them ride, giving myself time on those positions as well. If you're not following on Twitter, I recommend doing so because I have all the updates on here as well. Again, you might find a good laugh as well. But again, last thing I'm going to mention to you is some of these news coming out right now. One, the White House is very much not happy about the OPEC meeting. Number two, Putin, with what's happening in Ukraine, you need to be watching out for this nuke stuff. This is terrifying. Could be really bad if he does any type of this nuke stuff. If it does happen, if he starts doing tests, you will see America and basically the whole UN react to it, which will be very bad. So you need to be watching out for all of this as a whole. I really recommend following specifically the Twitter so you're up to date. Right here as well, if you want to get a good read or a good listen, this is the last thing I'm going to leave you with, is go watch this one from CNBC. One of the best things I've ever actually read or heard from CNBC. Really good read, and it tells you what's happening on the bond market. So it's going to give you a very good visual on the overall market. Go check it out. It's on my Twitter. Have a good one, trader.